Hello and welcome to LedgerCast. I'm Brian Krogsgaard. I've got a buddy with me today, Crypto Dale. How you doing, Dale?
Hey, Ledger, doing great. Thanks for having me. I appreciate it.
I'm glad you're here. We're going to answer some questions from the chat. We're going to look at a couple of charts, talk about price a bit, but we mostly want to just talk about some things that are on my mind and do an AMA of sorts. And Josh is not here, as you can hear, because I got Dale with me. But we're going to have a good time and let you know first, this episode is brought to you by Tokensets. Go to ledgerstats.com/sets. It's asset management for a DeFi world. You can bring your crypto strategies to life on Ethereum and Polygon now because Set offers leading portfolio management tools in the places that you want to be. You can simply put your money into one of the many products or asset collections that are on the Set protocol, whether it's leveraged ETH or BTC tokens or the DeFi Pulse Index or others. They've got a lot of interesting asset management tools on Tokensets. Go to ledgerstats.com/sets to check that out. Thanks to Sets for Tokensets for being our partners. Dale, you know, like we just go from doom to gloom, or doom and gloom to euphoria pretty quickly in this world. And like a week ago, Josh and I were basically wondering, is it all over? And today we're at the range highs on Bitcoin and ETH. Do you feel this emotionally?
Oh, absolutely. It's, I mean, it's, you know, my wife will often say that she can tell what the markets are doing without even knowing the market's based off my general mood.
Just off your emotions.
Yeah, but you know, I mean, this is the prime example of, you know, being able to change your narrative and your thesis on the fly. You know, I mean, there's some people out there that are so bullish that, you know, long-term bullish is fine, but in this little range here, you know, you can make a ton of money if you play the range right. And, you know, until you see the breakout either way, you know, I mean, yeah. It's obviously pretty rangy.
So last week's show, we were breaking into the areas where it made sense for us to be in, but it certainly wouldn't have been the type of thing where you think a week from now you're going to be at the range high. So you go from 33 to 40K, 7K, 20% or so in a week. And that's just a few days after what looked like breaking down from the range, which makes these ranges hard because oftentimes, you know, you tap so many times within a range, it gives you less and less conviction every time you're at either the bottom or the top end of that range. And yeah, now we're on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles in a row on Bitcoin. Bitcoin dominance up as well a bit, although ETH certainly has looked fine. It's just on a relative basis hasn't been as strong, but it itself is making a higher high on the daily above its 200-day moving average, which Bitcoin can't claim yet. And just generally the market all of a sudden just looks like it might have put in a pretty significant bottom for a time to come. Doesn't mean we can't consolidate, go down a bit here or there, but it doesn't. That's quite a lot of strength after so much despair. You mentioned before the show, to brag on you a little bit, you bought a little ETH around 1,800, so good on you for buying close to the lows, buddy. Are you wanting to sell your ETH yet, take your profit, or are you letting it roll?
You know, I don't know. I feel like we still have some in us here. Just looking at my chart here, I would like to see, let's just say I'm holding and watching. If I see a turn on the flip side here or something that's alarming to me when I'm watching, I'm gonna probably get out of it.
You'd be willing to cut it, but you're looking for upside. I think the next big level is like 2,600, and then really big level is like 2,800, 2,850 for me, which is just kind of that congestion zone before it really broke down. My high end of like, I would be really stunned, would be kind of above 3K, 3,200 to be more specific. But the 3K round number type stuff is a big deal in crypto, just always is. And yeah, I was tweeting a little bit, I think it was last night, how we're just not mentally prepared for what life would look like with new highs like this year. You know, like I've kind of come to terms with the fact that I don't expect any kind of new highs in Bitcoin and ETH for the rest of the year. Are you in that bucket, or are you thinking, you know, we could still leg up pretty significantly this year, and you're bullish for continuation to the upside?
You know, the thing with, I want to touch quick on the psychological levels of you know, the round numbers.
Yeah.
So I deal in grain markets often, and you know, that is like $4 corn for the longest time was this huge psychological level. So I know a lot of guys that would sell $3.99 corn cash price just because of the fact that $4, and it would touch it and then it would instantly dump. So they would have their orders in at $3.99. So that, you know, that is huge, and everyone likes round numbers. It's just OCD and human nature. But I'm in camp new highs this year.
Really?
So I hope you're ready.
Wow.
And I don't know why. I think maybe it's just my bullish narrative that I want it to be new highs.
Corn spent like 7 years between 3 and 440 or so. That is nuts.
Yeah. Yeah. And it's just gone absolute bananas here. I mean, a lot of we could talk for hours on this, but I think a lot of it was that the USDA was suppressing price last year. I hope no USDA official is listening.
Plot twist for the listeners. We are talking about corn, not Bitcoin.
So I think they were suppressing price for some reason or another. And then weather has been a huge factor in the Midwest this year, particularly in Iowa. And you'll see Iowa, if Iowa gets statewide, gets a big rain or gets rain, the market reflects that. So, you know, like today we got some rain overnight, and, you know, last time I checked, markets were down, corn was down 30 cents.
Yes. When you deal with farmers and stuff, let's get some additional value out of this for the inflation narrative in Midwest country. Do they all think inflation is here and they're like freaking out about how to preserve their cost basis? And what are their thoughts on kind of the inflation narrative within agriculture?
Yeah, they definitely think it's there, and it really worries them. And last year was such a unique year because I'm big on taking profits. I wish I could be that way with my own trading, but you know, I put cash flows together when I'm working with farmers, and we set just whatever price that FSA, which is Farmer Service Agency, we put those on the cash flow and whatever they do. So I'm thinking, you know, like prime example, I had a customer who sold some grain last year at $335, just 25,000 bushels. Nothing. He's a big farmer. Because we did the cash flow at $3 for corn. And so lo and behold, we proceed to go to $6 corn. And, you know, every time I see him, he's like, hey, remember when we thought it would be a good time to sell at $335? And I'm like, yeah, we did. But you know what? We didn't sell it all. You still have some. You can capture $6 corn if you want. But
I wouldn't know anything about being trolled over being wrong about my price predictions. But at least it's not to my face. It's just over the internet. So the chat's getting mad at us because we're talking about we're talking about corn. We're talking about corn. Bitcoin's breaking out while we're on the show. Yeah. It's at 40,800. Let's go. We're here for it. Look, we're both bullish. Show summary from a price perspective. There's been a consolidation since July 25th. Last Friday night, right after we recorded, there was a big breakout, and this is what I'm going to get into when I start riffing on stuff. There's a big breakout last Friday evening, and I was thankful. I got fairly bullish into this. I don't remember exactly how I traded it, only on spot, but somebody bought a whole bunch of call options, and also I think it was the same person bought a whole bunch of spot Bitcoin. And I think that they were trying to provide like a gamma tailwind to their own buys, which was interesting because there's the market's small enough for what in my mind is single players to push it around. But yeah, Dale, you and I have a friend who plays options markets pretty.
It's pretty good.
He plays them pretty well, and he's also just got his magnifying glass like to the flow, right? And he put us on to these calls being bought, and then the spot bid came in. I think certain markets, maybe FTX, were like trading at a premium on spot. And yeah, it just seemed like somebody was having their way with the Bitcoin market specifically. It was specifically the Bitcoin market last Friday. Now we're here for another Friday. The legacy market closed 50 minutes ago, and calls started flying again on Deribit through Paradigm, which is a tool to allow people to trade large size. And now there's a bid on spot Bitcoin and ETH. It's actually happening. They were buying calls on both this time. So same game. Is it gonna work again? Last Friday in Bitcoin alone, it was about a 15% move. It's been a 5% move so far today. A 15% move would put Bitcoin up in the 44,444 range, which I think is programmed, because that would also tap the 200-day moving average. It looks like, in my mind, it looks like we have a repeat market participant doing the same trade and hoping it works twice. And I don't know. I find that fascinating. And slightly concerning that like one entity, assuming it's one entity, can have such an impact on the market. Yeah, what are you thinking?
Well, and that this mutual friend that we have, he kind of,
let's just call him Gamma. We'll call him Gamma.
Yeah. So Gamma kind of alarmed us when we were up in the upper 50s and said, hey, there's this Chad. I don't even remember. He was just throwing on puts, right? And so he was kind of alarming us. And in this group that we're in was saying, hey, I don't know if this is a tactic or hedge or what the deal is, but you guys might want to be aware of this. And then all of a sudden we just instantly nuked, like a day later. So we're trying, and we're sitting there deciphering whether this is the same person, right? It's kind of fun to every time he talks in there in that group, we're in that kind of close one eye, open the other, reading the chat like, oh God, is it going to pump, or is this Chad option guy going to ruin the market? But like you said, it worries me in a sense that there's one entity or one person that can do this to the market outside of, Elon's tweets.
Yeah, but those are singular tweets, but then they have, a bunch of people are the ones actually executing on that, right?
Yeah, right.
So I think what I find fascinating is there's someone out there that's playing heavy with options, and then they're backing it up with spot purchases or spot sells. And I think I think this entity is specifically trying to be seen and trying to have an impact, which I just find fascinating. Yeah. And I think the reason they're doing this, I know a lot of people don't know a lot about options. I may try to describe that some more in a minute. I think there's two reasons. One is they can profit more if they can directionally control the market purely with their spot buys. Therefore, if they can back it up with options buying that will be profitable based on the adjustments they make in their spot positions, then they basically are able to win twice by moves that they know they will create with their spot purchases or spot sells. Nothing wrong with that, I guess, per se, in a illiquid market, but it's to be noted that I think that's what they're trying to accomplish, and probably what happened, at least to trigger the move with those puts back in May, and what we're seeing now 2 weeks in a row with calls, as perhaps they are redeploying cash and backing it up with pretty short-term options plays.
Right.
It's not the healthiest thing for a market, though. You really don't want few participants to be able to have such an impact, but it's too coincidental in my mind to not discuss. And so two things here. One, I think the market will have more participants with more money over time so that one person will not have as much of an impact. On the flip of that, I think options open interest, meaning the positioning of people within the options market, will be more important in Bitcoin and Ethereum pricing and importance of moves as we go forward, because the options market is still relatively small as a percentage of all open interest in crypto, and it'll continue to grow, and therefore it'll continue to be a more important part of the market, similar to what it is in legacy markets. Dale, do you know a lot about options?
Very basic, high level. I mean, I feel like an idiot talking with you and Gamma at the same time. I always do. I know someone in the chat wanted to know if you can explain better to a person who has very basic knowledge of options.
Yeah, I'm going to call them.
I don't know if this would be a good time to.
I'm going to call them Radica G. I don't know. Radicag? I don't know how you pronounce that. But yeah, we can talk a little bit about options. This is not to say it's all encompassing or anything else. I do have an options strategies for Bitcoin video on YouTube that is essentially the basics of options and talks about them in more detail. I'll talk about it a little bit now. We called him Gamma because what this person doing is, I think they're trying to create a gamma squeeze. And I don't want to talk about all the Greeks, but the way people describe the structure of options is through Greeks. So you'll hear terms like gamma or delta or theta. I'm not going to use those terms, but I'll talk about what options are generally. And generally, if you have Bitcoin currently at 40, let's just call it 40K. If you think it's going to 44K, then you can take a directional trade. Let's just start at the money, actually. You want to secure your ability to buy Bitcoin at 40K in the future. So you can buy a call, and you're buying a contract, and you're spending a dollar amount on that contract. And let's say that it's actually, I don't know how much it actually is, but let's say it's $2,000 to give yourself the right to buy Bitcoin at $40,000 in the future. So it's $40,000 right now, but you don't want to buy it right now. You want to buy it in the future. That date in the future would be your strike date. So let's say that is September 30th. So you have a 2-month call option. So for 2 months, you'll have the right to buy Bitcoin at its current price. So obviously you have to pay a premium for that. So you're paying that $2,000 to give yourself to buy the right to buy it at $40,000 2 months from now. That's what an at-the-money call option. You're buying a call option, a contract, to be able to purchase the underlying asset in the future at that strike date. And then that's the tenure of your option. And then that contract value will change over time. If Bitcoin goes down, well, your contract is not going to be worth very much because people can just buy it cheaper than 40K. So why would they buy it at 40K? Therefore, the contract price goes down. It may not be 2,000. As it gets closer to September 30th, the contract price may be $500 or something like that. And eventually, if Bitcoin is below $40,000 on September 30th, then your option will have expired, out of the money, meaning it is now worth nothing because you can just buy Bitcoin at the market price. Now, if Bitcoin is worth, say, $50,000, well, you paid $2,000 for your contract. It's at $50,000. Now you've netted $10,000 or grossed $10,000 versus your strike price, a $40,000 option, but you paid $2,000 for it, so now you've made $8,000. So if you're able to buy $40,000 options for $2,000 and then it goes to $50,000 at the time of expiry, by buying that contract, which is kind of like an insurance, you have made $8,000 in the process. And I apologize, future Fide, if I've lost you, but I tried to do that fairly basically. Does that make sense, Dale?
Yeah, basically, I mean, I'm going to be just honest. 95% of the people don't need to be messing with options.
Of course not. But this is
just the basic knowledge.
This is the basic knowledge of calls and puts, because these have a significant impact on the market, on traditional markets. There is no doubt in my mind that Bitcoin was at 40K exactly yesterday and not above it, because there was a large options expiry worth about $94 million yesterday, or 2 o'clock in the morning to be precise, at 40K. So if it had gone above 40K, the people who sold those options, because you can be a buyer or a seller. So if I'm buying that contract, the person that sold it to me often will be hedged or need to be hedged. And if it goes above it, they lose money. So they wanted it to be $40,000 or lower so that those options would expire worthless. So you end up getting price action to represent is kind of the underlying open interest in the market, in the options market. And that'll be more and more important over time. So people ask, where are you trading Bitcoin options? I am not. You can trade them on CME if you're an American and have a CME account. But Deribit is the only place that has real volume. Deribit controls this market. That's the website I'm looking at right now with metrics.deribit.com. It is not available to Americans. But that's where the vast majority of institutional options activity happens in crypto. So another thing to think about is in the money and out of the money options. At the money meant we bought the contract for the same price it is today, which is very simple. Now, the way people use this in real life, Dale, you work in grains. So someone who is a farmer, they love that $4 corn. They might say, look, I'm willing to pay a little bit to secure my ability to buy corn here, or something like that. And honestly, they actually do it on the opposite, right? They want to secure their ability to sell it at that price, which would be a put, because they are a producer and they want to hedge by maintaining their ability to sell at that price. And they're willing to lose a little bit in terms of the value of the contract in order to maintain their ability to sell it at that price. So that's why they use it. Now, of course, they go underwater if corn goes to $5, but they can still sell for $4 and they're still happy for that. They made that decision. That's them hedging their all their stuff that they have under their umbrella, right? All their equipment, all their processes, and they can lock in their pricing. This allows people, producers, speculators, market makers, to essentially all interact around these contracts to have all kinds of different impacts. So a producer may just want to hedge and secure their profits. A speculator may want to use it as a form of leverage. And that gets you more into this out of the money idea. So when we talked about buying an option for 40K, that's at the money. If you're a speculator, you might want to pay less for the option, but say I want to actually predict that it's going to be much higher. So instead of buying a $40,000 Bitcoin call option, I'm going to buy a $60,000 call option. And instead of $2,000, that one might only be like, I don't know, let's just say $500 for the ease of it. So now you only have to pay $500 per option to buy Bitcoin at 60K, because Bitcoin today is only 2/3 that price. So you're buying a contract that gives you the right to buy at a much, much higher price. So essentially, in those scenarios, you're speculating that the price of that contract will go up because you think the asset itself will become more expensive between now and your strike date of September 30th in our example, and therefore the value of the contract will go up, and eventually you'll sell that contract to someone else who wants to buy it from you. Those out of the money options can create interesting effects because the people that sell them may have to hedge against them. So they actually buy underlying Bitcoin in order to hedge the contract that they sold. So they are just essentially collecting all these contract prices, because about 85% of options in the legacy market, at least, expire out of the money, meaning worthless to the buyers of the contracts. So the sellers of the contracts almost always make money, but every now and then they lose a whole lot of money. So they try to hedge their way out of that in those scenarios. And that's a scenario where you might say they are delta neutral if they're constantly hedging their options positioning. Menards said, what is this extra confusing way of buying? Just why? Well, the answer is this is a derivative concept, just like futures contracts are a derivative of underlying assets. There's lots and lots of different ways to buy and sell assets. There's spot or common shares, which is basically just buying your one share of Amazon or your one Bitcoin, or your what do you do with corn? Bushel.
Bushels, yep.
Yeah, or
yep.
1 bushel of corn. But if you don't want to do that, you can do it in many other ways. You can buy futures, which is the price of it in the future. You can buy synthetics. You can buy options. These are products that exist across the board. So it's things that, yes, you should know about. And it may sound complicated to you, but it is impacting the price, I assure you, and it will impact the price more in the future. So when you see people talking about significant options trades and things like that, this is what the most sophisticated players in the markets are playing with. In addition to underlying Bitcoin and Ethereum and whatnot, they're also playing with options. So there you go.
Hey, Ledger, someone earlier had asked this question and it just dawned on me. Now that, are you done with your option?
Yeah, I mean, if you want to go beyond that, look at the video. There's a long way that you can go down this rabbit hole. One other one I'll just mention. This is just a pure one directional trade, right? And you can, BTC VIX, if anybody knows VIX, he once was talking to me about it and was like, if you consider buying or selling spot Bitcoin like a screwdriver, when you bring options into any asset, it's like the whole toolbox, and you can do all kinds of different things. It's not just a screwdriver or a hammer. And with options, like you could do something, just as an example, if it's at 40K today, you say, well, screw all of these people thinking it's going to go above 45 or below 35. I think it's going to stay right in the middle. So you make money by it not moving. So that's one of the examples of something you could do. That'd be called selling a straddle or selling a strangle, or you can do many other strategies. There are dozens and dozens of different strategies and ways to mix options with futures and spot and hedge and speculate and lever everything that you're doing. There's so many things. It's one of the most fascinating parts of trading. You should just know it exists and know the basics of it. Knowing the basics can also be useful. Now, Dale, what were you going to say?
Okay, so Jeffrey Allen asked earlier, how do you handle taking profits on the macro level? Meaning, do you set goals around things like pay off all debt / mortgage at X dollars profit, or more market-based approach of I will cash out when technical indicators or valuations tell me to?
I think when I've used specific numbers, like if I say today, Dale, I am selling my Bitcoin at $100,000 each because that's a round number that I think is cute, right?
Yep.
My chances of being right about that being a good sale are pretty low, you know? Whereas for me, the reason I like to look at charts is because hopefully the charts can give me some kind of hint that the market is showing weakness. And therefore I'm able to capture the majority of the move, even if I don't capture the entire move. And that prevents me from selling too early. It prevents me from selling too late. And therefore, yes, I constantly have essentially a moving target. As an example, this is not Bitcoin or ETH, but like if you looked at the stock market, for example, I've been largely out of the market. Thankfully, I've done okay in the stock market because I've like redeployed to different types of assets. But you know, the February 2020 top before COVID, the Qs, which is just what is that called? ETF of the NASDAQ, went to about $235 each. And then it crashed down to 165. I legit thought it was insane when we made new all-time highs. I thought it was insane. Yeah. I thought it was insane when we got like, you know, 2/3 of the way back up from that crash. I was like, this makes no sense for where the economy is. But of course, we were just printing money like mad. Everything was backstopped. Everything was supported. And it was in no way attached to the real economy, of course, and everybody that was struggling. And then not only does it go back to the all-time highs, it also went another 55% beyond the all-time high. And off the bottom, the Qs are today 123% off the bottom from the COVID lows. I would never have predicted that. And I was out before it even got to the all-time high. So I've had to try to figure out how am I going to make money rather than being in the queues in something else, because I never actually redeployed significantly, even on the small dips. And if I would have just said, okay, I'm just going to stay in until, and then it recaptures some moving average or whatever I'm going to play, and I'll just stay in until it like breaks down from one of those like lower time frame moving averages. In this case, I'm looking at like a 20-week moving average, because historically that's the type of thing that might indicate a significant correction. Now, you don't capture the top. Let's say it does that today, you'd lose 6.5% today if it just went below the 20-week moving average. So you're down 6.5% off your top, but you're still up tremendously versus where you would have sold where your rational brain told you to. And so therefore, I think that moving target enables you to capture much more of the move that our rational brains may think is where the market should go or top or be limited to. But then the irrational market, or the market that's smarter than us, has a different idea, basically. So therefore, you just ride that wave. Who could have ridden Bitcoin to 20K in 2017 as an example? Seemed like everybody had that idea this time, right? We broke 20K, and they were like, "Let's go 500K," and then we went to 64. So like that wasn't everybody's hopes and dreams. Using that same 20-week moving average, you would have been out at 46 though. And when the low was 29, that actually would have preserved you quite well, even though it wouldn't have felt like it at the time, because you would have been down from 64 to 46. But in 2017, you would have sold at, I don't know, 11K, something like that, which still would have felt bad. You would have been 50% off the top. But if you were in from like a couple $100, 11K is pretty amazing. You never would have held for that, just like because your rational brain is telling you to. So.
Yeah, and on that topic, I know a lot of people say the people that got in early were lucky, but I mean, when you think about it, they've got to have steel hands, because say they got in at $1, and when Bitcoin first cracked 1,000, and you're still holding. It just blows my mind when I sit and think about it.
Dude, I think they're psychotic.
Yeah, for real.
I love Kobe, but I think he's a psychopath. Dude's been in crypto since it was like $7 or something. Since Bitcoin was like super, super cheap. I mean, it wasn't $7, but 2012, 2013, it was very, very cheap. He's been through 3 large cycles, I think. To hold through all of that, like if you know in your life what it feels like to buy under $100 Bitcoin, and then Bitcoin is $60,000, you're crazy.
Yeah,
normal people like me and you, Dale, we are so out by that, right?
Oh gosh.
Like we're piecing out. Like we could you pay down the house, you retire, you start making your 4 or 5% a year, and you live quite well in Alabama or Iowa off of that, and you're happy as can be. So for somebody to stay exposed to the market for that long, to the same asset as it goes up that much, that's very difficult.
Like a comparison for me would be, I got in, everyone knows that's familiar with me. I got in Luxcoin at 89 cents. And back in 2017. Oh, Lux, yeah, right? And it proceeded to go to $46. And I mean, looking back now, how I did not.
Yeah, you pulled a 50x and didn't sell it.
I sold some. I sold the last of my bag at $10.
Yeah. On
the way back down. But still,
so you still pulled a 10x even though you sold an 80% drawdown.
Yeah,
that's crazy.
Exactly. It's nuts. It's like movie material when you talk about it.
Yeah. I think my strategy typically is to try to, and I'm never like perfectly effective at this. In fact, I think oftentimes I'm like quite mediocre at it, is to really limit my downside and try to capture as much of the upside as I can, but not not essentially marry it so badly that I get completely wrecked if the thesis reverses. Within crypto, my ability to believe in the long-term value of a project or an asset is really pretty limited to like Bitcoin and Ethereum. If it's an altcoin, a Lux coin, or others, even some of the ones that I think are really quite promising, I don't think any of the others have significant like tokenomics or network effects or things that create decade-long value like Bitcoin and more Ethereum do. So therefore, it gives me much better conviction in those large assets. However, the upside in those large assets is not near what it is in some lower cap thing. And to answer your question, DC, that includes Solana as well. Like I just don't have the conviction in something like Solana, even though it's promising. I've seen there were a lot of things that you could look at in 2017 that are Solana-esque, right? You know, XYZ, but better than Ethereum. My problem is, as cool as Solana is, and even as a relative market cap, how decent it is, it's $32, and investors have that sucker under $1. And I can't. I just have a hard time there. Like, I need a very good reason to buy it. And even then, I probably will be in purely technically with a fundamental favorability, but not like I can always get dumped on quite severely by people that are in much cheaper than me. That said, from that technical perspective, I gotta say, Dale, Solana looks okay right now.
Are you trying to get some more Solana swag right now? Is that why you're?
No, I got more Solana swag than I can handle, man.
You know, and here's someone in this W Mavb or whatever said that, but, and I see this and I want to talk about it here. The Solana DEX really works. That never happened in 17 or any other chain. So that's a significant comment to me because, you know, back in 17, all these projects were saying, you know, like ADA, we're going to use smart contracts, or we're going to do this, or we're going to do that. And everything was so speculative back then and speculation based with, you know, in correlation to price. Whereas now, you know, you see like a Solana that has the working DEX, or, you know, actually it's not like what is it that Nike and Bully always talked about? DGB.
Digibyte.
You know, it's so fast. And, you know, Solana is legit fast, and it actually has that. So you're seeing that in this run, I think, that these projects are actually legitimate and do have a working product.
Yeah, they have.
And, you know, back
in well used. They have a lot of good reasons to be more have better conviction this time around than last time around.
Someone asked earlier what my weapon of choice is in GoldenEye, and it's RCP-90. Sorry.
Oh, wow. Wait, was that the Klob, the like rubber band gun, or
that's the Klob is definitely a gun there.
That was a different weapon. That was like just a
different weapon. Yeah.
Yeah. Okay. I don't remember the RCP. I don't remember which one's which. I feel bad. The Klob.
That's all right.
I knew I was always frustrated when I got the Klob because you just had to shoot somebody like 200 times.
You did. You had to unload like 3 rounds in them for them to die.
Yeah. Yeah, I think some people have it in them to have that massive conviction for an altcoin forever. That's just not me. And the biggest reason of all is because I don't have access to these tokens at the very, very cheap levels like VCs do. And I don't like having unending conviction for a bag where my price is like 50 to 100 times or 200 or 300 times higher than some venture capitalist. And I know I do not like that feeling. So
who does? I mean,
yeah. So even if I have conviction, like they can just dump everything on me, and they had conviction too, but they're up 300x. Yeah,
and you know that they just don't have a retail bag of $1,000 or $10,000 either. It's not.
Yeah, they didn't.
I mean, they've got they're sitting on a fat stack.
Right, they didn't buy $10,000 worth at $30. They bought like 500,000 or million or multi-million worth at like 50 cents. They're in a much comfier position than me in that scenario. That said, some of these are starting to curl up and look interesting and yada yada, but I don't know. The momentum that ETH and Bitcoin look like they could have here seem like they'll probably outshine alts for a minute. So I'm mostly interested in the majors for now, and then I'll probably change my mind in like 4 hours and start rotating to other stuff if I think it can move faster.
It's not a bad strategy. It just seems here in the last couple of weeks that weekends have been the pump, which is the different narrative than it was there.
Weekends
2-3 months back.
We would say weekends were fake because that's when everything would dump. And at the same time, it's like legacy has been a little dicey, you know, like Amazon was down like 7% today or something like that on
it got crushed.
Disappointing earnings, which Amazon's like 9-10% of the basis. So that's a little scary, right? For the NASDAQ. Yeah. Let's see. What other questions do we have, Dale? Have you...
Someone wants to know why you, and I'm summarizing here because I can't find it, why you think ADA will overtake ETH.
I did not say that.
I know. That's what someone else said it, and then they said, why Ledger?
I did not think that. I think ADA is vaporware.
Did you see my tweet about me being an ADA smart contract dev?
Everybody is, aren't they?
That's what I was gonna say, because I've done just as much work as their smart contract dev has.
I know one I want to talk about. There's a lot of regulatory stuff going on right now. Jake Chervinsky did a 21 tweet thread about the threats of what's happening. I'll link that in the show notes, but it's just worth mentioning that there's this big infrastructure bill in the U.S. And within that infrastructure bill, they have to come up with ways to pay for it. And there are something like 30 different things proposed, if I recall correctly, for ways to pay for it. And one of them is enforcement of taxes on people who've made money in crypto or something along those lines. Basically, they are sneaking poorly thought out crypto regulations into an infrastructure bill as a pay-for item. And they think it could collect upwards of $30 billion per year, which they've made up. And they basically have an assumption that no one in America is paying crypto taxes, which I can at least attest, and I believe Dale can as well. That is not true.
Yep.
I've paid a lot of money for crypto taxes over the years, and have a lot set aside to continue doing so. So that frustrates me because some of the negative impacts on this could be severe to the degree of unintended, perhaps, or intended, which would be a horrible strategic mistake, like ban on American mining as a severe outcome if it passes as is, which surely it won't. Things that wouldn't go into effect based on Jake's thread until about 2023, but certainly some really concerning language in that infrastructure bill, and in addition to that, has a real chance of being passed because this is one of the few bipartisan bills that has popularity and is probably going to get passed because, you know, one of the only bipartisan things is spending money without paying for it. And I don't care how they say they're going to pay for it. Like the crypto example here is a good sign of like, yeah, wink, nod, 30 billion, but not really. So I just imagine most of the ways to pay for it are ridiculous in one form or another. Because I doubt that the crypto enforcement thing is truly a great way to pay for it. They just want to put it on paper, but it could have significant impacts on American crypto businesses and on American crypto investors. So y'all should read Jake's thread.
Yeah.
And you can actually reach out directly to your senators in particular, their offices, to express your dislike for that item.
I mean, the general thought in Congress is that crypto is only used for illegal activities. So with it getting ramped up, you know, the prices and the media attention that it's getting, they're trying to do everything they can to ensure that, you know, the stability of the US dollar, in my opinion. And they're all so big, such dinosaurs.
Yeah.
That they just can't grasp the concept of it. And who's that Minnesota Representative Tom Emmer.
Tom Emmer?
Yeah, I think.
I don't know.
I tried to get him on the Crypto Street podcast, so I signed up for information, and now I continually get emails from him about where he's holding town rallies and whatnot.
Nice.
But he's pro crypto. Yeah. Oh yeah, big time.
Oh, he's the guy that asked Meltem about shitcoins.
Yeah.
That's how he said the word shitcoin in a congressional hearing, which is pretty funny.
That's awesome. He's great. But I think you'll continue to see, that's like you said, you hit the nail on the head. To them, that they're saying 30 billion when I saw a tweet that someone debunked that the market cap wasn't even where it needed to be to reach the money they wanted of crypto. So it's just, they're just so out of touch with reality, and not just on crypto, but a lot of things is the U.S. government. But that's neither here nor there.
Yeah, there's quite a lot on the table in terms of on the regulatory front, whether it's China or the U.S. Or elsewhere, both within like the proof of work world with Bitcoin and to a lesser degree Ethereum, as Ethereum's moving more out of proof of work. And also like DeFi stuff where they want their hands on it. And the thought processes apparently in Washington, this is according to people that are tweeting about it, not myself, are basically that if it's being traded on a DEX or like if it's happening on chain, all this stuff, there's no capital gains being paid off of that. They're not getting their share and they want their share. And it's just so absurd. Like there's absolutely reporting that goes on here, because at the end of the day, people like you or me, Dale, we eventually may pull money out of crypto and then have to pay taxes with it. More so, like you could get audited at any point and you would owe on any of those transactions. And in the US, you're taxed on a transactional basis, not a withdrawal basis. So I actually have to plan my taxes based on what I've traded in the calendar year, whether I made money with those transactions, not even like, did I take it out of crypto? I could not spend $1 on real life, but if I traded and made money in crypto, I'm going to owe taxes and therefore have to take it out of crypto at the end of the calendar year so that I can pay the taxes moving forward. And that is sucky for a P&L perspective. A year like this where everything's gone really well, like it's like, 35-40% of your stack could end up going to the tax man if you've made multiples on your crypto net worth, and that sucks. So for them to then say these people don't pay any taxes, like that's just rude, and they're going to take it upon themselves to like put additional restrictions or something. It seems really short-sighted. And could put us at a strategic disadvantage for crypto worldwide and all kinds of other stuff. It's just a mess. And this is a very real threat. Of course, the impacts wouldn't really go into place until more like 2023. But if it gets passed, it just means there's going to be a really long and hard fight ahead. So it's better to change it now, despite you calling it sensationalism, Mr. DC. I do think there are severe risks. As is, and it'd be better if the language could be reworded.
Yeah, I mean, who knows anymore with the government?
Yeah, Peter Ludoff said, luckily it's 0% if you hold for a year where I live. I believe he's referencing Germany. At least I think another friend of mine in Germany, the rules are the same, which is amazing. I wish that was, like, I would have such diamond hands if I could have no tax basis for holding a year. I would just look for like GOAT tier entries and I would just hold.
Yep. It'd be a heck of a lot easier too, because you could just buy and hold and not, you don't really
like
need to pay attention.
I won or I didn't win. One or the other. So, yeah, I think that's pretty amazing. I wish the rules were that way here, but nevertheless, that's the regulatory front. We talked about options. What else do you want to talk about, Dale? What questions do you have, Dale? Just don't make them too hard on me.
Boy, I don't know. It's hard for me to ask you a question because you're so accessible to me that if I have a question, I can just ping you and and you usually.
Are you into any DeFi stuff?
So I bought yesterday. I bought some Axis, I think it is. Axes. Sorry. So that's about that, and then obviously Pint is my other DeFi thing. But I got, honestly, and I've said this in our group, and I'm not afraid to say it here on stream, but I got out of a lot of crypto in probably March per se. Sold some NFTs here in the last couple weeks. That has kind of allowed me to replenish pretty much what I took out. Not quite, but so yeah, I've been just kind of holding. That was how I bought some of those. I converted it all to USDC when I got it, and then luckily was right before the crash, and then I bought that ETH at 1820 something.
You're a brave man, buying Axes at $43.
I am. I don't brave or stupid, one of the two.
I couldn't do it, but like fundamentally, they're making money hand over fist, and everything I've read is that like it's actually still a value relative to like the activity happening in Axes land, and I can't. It's one of those where it could double again, but I just won't be the one reaping the benefits. But I hope you do. It actually looks okay on the hourly chart. It's about 20% to all-time high, and you could cut it below 40 if you really wanted to, avoid too much downside. So
I think that's where I have my line on the chart. But I guess I'm in a position where I can kind of watch it a little more now than I was 3 weeks ago. So
yeah, and let's see other DeFi stuff. A lot of stuff looks pretty similar to what we've talked about in recent episodes because it's just consolidated for a week straight, much to my chagrin. Like the things that I've been watching and have been watching, like Comp, just painfully sideways while Bitcoin moons. And let's see, somebody asked me about convex and kind of the Curve ecosystem. Convex is essentially a token to allow you to get more liquid yield from the V-Curve ecosystem. V-Curve is what you get when you stake Curve for the maximum 4 years or whatever they call it. And what Convex does is they can take that Curve, convert it into convex Curve, and then they go ahead and drop it down the black hole of V-Curve. But your convex Curve is then stakeable, and you earn the V-Curve rewards as a convex Curve holder. But you can trade your convex Curve however you like. So it gives you the ability to get the V-Curve rewards of the most staked Curve levels with also maintaining your liquidity. So if you want to hold Curve but not stake it for 4 years, you can do so using convex Curve. And then they also provide staking and stuff for a lot of other stuff. And then the yield that you get depends on which product you're staking within convex. It's really one of the more interesting DeFi kind of yield generating protocols out there in my mind. And I do like it. I do own some, so shout out, I guess. I don't own a ton. It could go to zero. It could go to zero, and I wouldn't like sweat it too badly or anything. But yeah, I know some people on the team. I have confidence in it, and I think within the DeFi landscape, it's very interesting. And Curve is one of those that has a really nice product as well. It's a lot like UniV3, if you don't know what Curve does, Dale, where it has really, really, really tight liquidity on swaps. And historically, it's primarily been used for stable-to-stable swaps. So like if you're going from USDC to USDT, you can do it cheap and efficiently. So you don't have like a lot of slippage or anything. You don't have to spend a lot. And it's like all that liquidity is basically focused between, 99 cents and $1.01 or, less. And I think over the longer term, they're actually expanding that out to more stuff so that even majors like ETH versus BTC, you might be able to trade with really, really low slippage and stuff. So it's a really interesting protocol. It might end up a better version of what UniV3 is trying to be, because UniV3 does similar stuff where you can concentrate your liquidity within the automated market making system that that UniV2 used. So whereas that was like completely spread out, and then like the size of your order, think of it like the size of the ball that you drop into the liquidity pool, and those larger orders are going to be like larger balls that make larger waves within the liquidity pool. What this does is it just shrinks the size of the pool where you'll have impact. Maybe is the way you put it. So like put some false walls or something within that pool. You drop the ball in there, and then you have an impact in that like much smaller pool wherever the price currently ranges. And therefore you're able to get filled with less slippage. And yeah, so it's interesting. You can make larger orders with less slippage on UniV3, but there's a lot of complications to it too, because where people provide liquidity has to be moved around all the time. But yeah, the evolution of automated market makers is still quite ongoing. It's not settled technology, if you will.
Still remember Uni setting this whole bull run off last summer.
Yeah, man.
And how much that has changed.
Do you remember how many Uni was the airdrop? Do you remember? 400?
Yeah, I think so. For some reason, I want to say something. Yeah, 400, I think.
Yeah, it was 400. And Uni is still $20 today. So every wallet that got Uni airdropped is worth $8,000. Like, that's mind-blowing.
Incredible.
And Uni topped at like over 40, so twice where it is now. So it was worth $16,000 for a free airdrop at the top. So pretty incredible. And
that's like the Cope or the Hate airdrop.
Yeah.
Cope. I don't think. Were you part of either one of those?
No, unfortunately, I wasn't. I mean, but honestly, if you theoretically captured all the big airdrops, you probably made like 6 figures over the past year. If you sold the tops, because 1 inch was a huge one. Let's see, Cope went to like $8. I don't know how big the Cope airdrop was. It dumped all the way to 56 cents, and I made fun of Gainsey for buying it. he was buying it at like 90 cents, so it did go down another like 30%. But if he held it, then he's the one laughing at.
I think he did too.
He's back to $2. I know he bought more at 67, but he just bought a small enough amount, I guess, to where he could bag hold it for a bit.
I'm not trying to humble brag here, but I sold my Cope airdrop at 720.
Wow, that's not even a humble brag. That's a straight flex right there.
And then the Hate, I know Hate was like 16 and a half, I think was theirs. And that got up to like 1,600.
It was 2,000 Cope that you got?
Yeah.
What? So that's a $14,000 airdrop.
Yep.
Wow. I missed out.
Well, the Hate one, you got 16 and a half Hate. And that got to what, 1,600, I think. So that was like 26,000.
Okay, so between 3 airdrops, you've got 26, 16, and 16, right? So that's 32, 42, 52, $60,000 worth of airdrops between those 3 if you sold the top.
We love the airdrops.
We love the airdrops. Good gracious. My 1 inch airdrop was worth like 30 grand, which was pretty amazing. Because I actually did a trick on that one. Where I actually got the airdrop to multiple wallets because I was anticipating it. But
I remember you broadcasting that in the group saying, "Hey guys, you should check this out. I think whatever," and whammy.
Yep. I was hoping for it and I got it and I got very lucky. Nevertheless, let's leave it there. I'm pumped. It's Bitcoin is breaking out live on the show. 41.4K. Dale. I need you.
Anytime we need the market to pump, I was gonna say, anytime we need the market to pump, bring me on.
I appreciate you, sir. Everybody follow Dale at CryptoDale on Twitter. Go to letterstatus.com. I'll be here for a minute for the after show. We'll catch y'all next time. Bye-bye.
Yeah, thanks, guys.
Monuments crumble.
Go to letterstatus.com/sets.
In the blink of an eye. The easy river has just run dry. In a house